Welcome back. You're watching The Money Show, and it's time to answer your portfolio queries. And just in case you have just tuned in, let's just flash our WhatsApp number and our email ID where you can send across your questions and give us details of your existing investments. And accordingly, we will help you align all of that with your financial goals. And to answer your portfolio specific queries, I'm joined by Shweta Jain, who's our expert and will be doing your live financial planning. Shweta, hi. Welcome to the show. And a very interesting set of questions. Let's take Mr. Sudhi's question first. And he's got a couple of funds in his portfolio. He's talking about having Bandhan Small Cap, Edelweiss Mid Cap, ICICI Pru Focus Equity, Motilal Oswal Large and Mid Cap, Motilal Oswal Mid Cap, and Nippon India Large Cap. He's got Nippon India Silver ETF also and a small cap of Nippon, Parag Parikh Flexi Cap. He just wants to know how is the fund mix, and that's the only set of details I have from him. So Dheer, if you're listening to us, very important that you also send across what's your financial goal so that we can help you align all of this investment with that financial goal. But Shweta, on the face of it, looks like a case of over diversification. Too many small caps, especially in this portfolio. So what would you recommend?
Yeah, hi Kavita. Thanks for having me on the show. Yes, definitely a lot of schemes and a lot of small cap as well. See, what happens is, especially with new investors, they think that the recent performance that they've seen will continue in the future as well. And I think that's a big mistake. There's not a bigger mistake than that that they can make. Also, allocations to each scheme is very important. Like in this set of schemes, right? One could have 1,000 rupees investment and one could have 1 lakh as an investment, and our advice will change based on how much is allocated to each one. But having said that, let's just go through scheme wise, and I can give some suggestions. They have multiple large cap, mid cap schemes, not required so many as such. Even if you're invested in many schemes, the diversification works against you because it's too diversified, it's over diversified, as you correctly said. Small cap as well, you cannot get a piece of every small cap that is there in the market, so you have to pick and choose. Some bit of thematic is also there. I hope silver is there for the long term and not just as a thematic play. Also, not allocation more than 10 to 15% of your overall allocation should be in metals like gold and silver. Here, I would definitely recommend making some small changes, ensuring you set your goals, put money aside monthly and not just one-time investments. You can look at reducing some bit of the small cap, be it Nippon or Bandhan. If you're looking at a good large cap scheme, stick to one. Don't overdo it. You can cut down maybe Nippon India large cap or Motilal large and mid cap. You also have Motilal mid cap. So cut one of these schemes as well. I think once it's a little more tighter, the portfolio will look much, much better.
All right, really need to cut down your entire exposure in small caps. And, Shweta, especially in markets like these when it's extreme volatile, and I don't know since when he's been investing, but definitely a small cap would be dragging his portfolio down. You know, how having too much of exposure in small cap is actually more risky and, it drags the returns. How would you like to explain this scenario?
See, if somebody has small cap in their portfolio, assuming that it's going to just give you higher returns because, high risk, high returns, it's also true that high risk means higher volatility. Your portfolio will be down at the moment. Your large cap will recover much faster. Your small cap will take much longer to recover. So your portfolio, which could have looked, if you actually divide it into two parts, your large will look much better, even volatility wise, saying, okay, this is moving not beyond a particular a point, but your small cap will hopefully not see a free fall, but see a much larger fall and will take much longer to recover. You can actually see that analysis as well.
All right, let's move on and let's take our next question. This is from Harsh. He's from Mumbai and wants you to review the portfolio. He's 38 years old. Target is 3 CR in 15 years. Current portfolio value is 20 lakhs. Current SIP is going on Parag Parikh Flexi Cap, Motilal Oswal Mid Cap, Tata Small Cap, HDFC Flexi Cap. He wants to add 20,000 more. He wants to know if the existing fund mix is good to add the SIP or maybe a new fund is needed. Is the portfolio well diversified? Tata Small Cap and Motilal Mid Cap not giving decent returns. So he wants to understand if he should be continuing in this portfolio or should be changing it. And should he continue two flexi caps, or there's a need only for one? And in case he needs to redeem any funds and invest in other, how should he invest the money? So interesting set of questions, and through Harsh we can answer a lot of other viewers who also think on the same line. So let's take it one by one. Your fund mix, Shweta.
Right, so he currently has almost 50% dedicated to flexi cap and 25% each to mid cap and small cap, which is actually not a bad idea. He needs 20K additional to invest to get to his target, and that's exactly what he wants to do as well. So I think he's on the right track. He must have done some calculations of his own as well. What I want to do is tell him to add something like a UTI or a DSP Nifty 50 here, because I feel like one good core part of the portfolio can be large cap. In fact, flexi cap has that flexibility to move towards small and mid more as well. So I would recommend something like a DSP Nifty 50 that he can add on, and 20K will give him a good solid uh, sort of foundation for his portfolio. And then as the portfolio progresses, he can increase mid, he can increase small cap as well. But today, I think going by what we are looking around as well, around the world as well, I think a good large cap exposure would be a tremendous addition here, low cost as well. So 20K, he can absolutely invest in the Nifty 50 fund. It is quite well diversified. Like I mentioned, Flexi Cap, he has 50% allocation, and now he'll sort of have more towards large cap, which is what we actually need in the portfolio as well. Tata Small and Motilal Mid Cap are not giving returns right now. Yes, I don't know how long you've been invested, but it does take time. So mid cap, I would say anywhere 3 to 5 years. Small cap, I would say 5 to 7 years is a good time to sort of see. The schemes are absolutely fine. They're doing their portfolio selection well. It's Motilal mid cap. I would just like to warn you that it's something which is a little bit more aggressive than the rest of the portfolio. So that if you're not comfortable with the aggressiveness of the portfolio of this part of your portfolio, then that is something that you should be thinking about. But otherwise, it's a good scheme. It's actually a good addition to this sort of combination as well. So I would definitely say stick to these schemes. He can continue with HDFC FlexiCap or Akbari FlexiCap, while they both FlexiCaps are quite different in their styles. So I would say it's fine. There is not much duplication. Of course, there will be overlap in between, but not much. So I think you can continue with both of these. You don't need to really redeem any of these funds. But like I said, we don't know since when they're invested and how much is there in each of these portfolios. We just know the monthly allocation. So with that limitation, this is the recommendation.
And with that, it's a wrap. Thank you so much, Shweta, for joining in and helping our viewers understand their portfolio requirements and aligning it with their financial goals. Thank you. And with that, it's a wrap for all our viewers. I'm going to leave you with our WhatsApp number and email ID. So keep sending us your questions. Thank you so much for watching. Goodbye.